Happy Friday, everybody. Today is December 12th, 2025, and this is your Friday planning video. Now, as we approach the final stretch of the year, a lot of people start to feel that familiar December pressure. You're trying to wrap up work, maybe handle some travel plans, and somewhere in the back of your mind, you remember that you once promised yourself that you would have your financial life completely organized by now. And of course, markets always choose December to act a little unpredictable just to keep things interesting. So today I want to talk about a mindset shift. Finishing strong doesn't mean finishing everything. It means making deliberate choices about what matters and letting the rest wait until January. Let's start with what's usually top of mind this time of year, the markets. December has a reputation for being friendly to investors, but it's not a guarantee. In years when the market has already delivered strong returns, there's always speculation. Will we get that famous year-end rally? Are we due for a pullback? Is the Fed going to take the punch bowl away? And then, as always, you have a few geopolitical headlines and one or two surprise earnings releases sprinkled in in the volatility. What I remind myself is that December is rarely about what's happening right now. Markets are forward-looking, and so is planning. The most important financial decisions you'll make this month have very little to do with whether the S&P 500 finishes the year up another 0.5% or not. Instead, December is about positioning for taxes, positioning for cash flow, positioning for the goals that you want to hit in the next 12 to 24 months. It's also about emotional positioning, which is often overlooked. Too many people end the year feeling behind. Even in good years, there's this subtle belief that everyone else is ahead of me. But the truth is, everybody thinks that. And ironically, it's one of the biggest obstacles to good planning. So let's get practical. Here are the questions I want you to be thinking about between now and year end. Number one, have you captured the opportunities this year offered? Now, for some, that means tax loss harvesting. Even in years when markets are up, certain holdings may be down and they can be used strategically. For others, it's topping off retirement contributions, funding 529 accounts, or completing a Roth conversion while you're still in a favorable tax bracket. Number two, do you know your January cash flow? Now, December is when many people get blindsided. Holiday spending meets property taxes, meets early year expenses. You don't want your financial year starting with a scramble. We can map this out together so the next few months feel purposeful, not reactive. Number three, what did you learn about yourself as an investor this year? Not what the market taught you, but what your own reactions taught you. Were there moments when you felt uneasy? Were there times you wish you had rebalanced? Did you find yourself checking news more often than usual? These small observations are planning gold. They tell us how to design a plan that fits the real you, not the hypothetical investor you hope you might be someday. And here's something important. You don't need to solve everything this month. In fact, trying to do so is one of the fastest ways to undermine long-term planning. December is better used to identify the one or two high-impact changes that make January dramatically smoother. For some of you, that might mean upgrading your savings structure, moving from an ad hoc contributions to something automated and consistent. For others, it may mean addressing an insurance gap, reviewing estate documents, or finally updating those beneficiaries that I talk about all the time. These things sound small, but they are the foundation of long-term financial resilience. Now, before I close, let me share a simple thought. December comes with built-in reflection. We look back at the year, at the things that went right, the things that we would have done differently, the surprises we didn't plan for, and we carry that into the year ahead. So here's my recommendation. Pick one financial behavior to improve by 1% next year. Not a total overhaul, not a 20-point checklist, just one area where a small improvement will compound over time. Consistency beats intensity in planning, just like in everything else. If you'd like to walk through your year-end checklist or identify that one thing to focus on, reach out. These are some of the most productive conversations we have all year. And with that, take a breath. December is full, but you're not behind. You're right on schedule. Have a great weekend.